Hey guys, Brenton Walker here once again for another video. Today we're going to be talking about some essential stuff. We're going to be talking about breakouts and how to maximize the profit from breaking out of one area to the next and seeing where those zones and areas are going into and out of that an area consolidation, and then being able to maximize without having a lot of exposure. So as you guys can see, since yesterday we took that USD Japanese yen trade. We talked about the consolidation and how it was inducing buyers to go long. And then after you saw that liquidity build up, we saw that market broke down to the downside where we made a major profit. We're still in this trade, about to hit our take profit on this position. Pretty essential stuff, you guys. This is where I was talking about yesterday, how to maximize your capital, how to minimize your exposure. We had basically a 5-to-1 risk ratio on this trade. It was very essential. And the reason why I found this trade and how I bought it at basically the top of the market was it was pretty self-explanatory, and we talked about it in yesterday's video, is how the market works in these similarities. It has monthly highs, weekly highs, daily highs, and the market likes to form support and resistance in between those market resistance and supports. And that's how the market is making those consolidation areas, how it makes that bounce, how it makes swing highs and swing lows. It likes to test previous lows, test previous highs, test areas that it breaks out for, and then tries to go into new areas. As well as what happens when you have new months, the market actually it resets its percentage it can go, or percentage it can gain momentum on the range of the market. So say that this is the full month, right? The market can only go up so much or go down so much before it actually has to reset for the next month. What a lot of people don't understand is that the market is an algorithm. It's basically a set algorithm that plays off human behavior and market analysis and market historical data, right? Fundamental analysis, whatever economy's monetary policy system is basically focused on the algorithm that is played on. And what happens is speculation investors, since institutions own 92% of the momentum and volatility, that allows for a lot of them to give traps, a lot of them to break price in areas so they can basically make you lose money. So it's very key. It's very, 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 very key that you guys understand how the market really works and how we can play into the market and how we can make these positions to be able to have days like this where we're up 3,500. And we have a couple other trades as well we're going to go over in today's segment. So that's just a recap of yesterday's. If you guys are new to my channel, my name is Brenton Walker. I'm a trader at Traders Profit Club. I'm the Forex analyst here. I've been trading for about 6 years. The last 2 years, I've been able to be profitable full-time without any other stranded income. Been able to make a lot of money in the markets and being able to sustain a high profitable trading strategy. So this is what I'm going to be teaching you guys throughout these live streams, and we're going to get right to it. So that being said, we're going to talk about as well as what we talked about yesterday, but go into depth on today with breakouts. So a lot of people ask, how do you catch the breakouts? Because a lot of people, when they're talking about Bitcoin or talking about cryptos, they're like, man, I want to learn how to catch that breakout where you can buy at the low and be able to essentially maximize your profits, maximize the leverage on whatever broker you are, if you're doing foreign exchange as well, to be able to make that sustainable income. So I'm going to teach you guys something that is very, very close to me, and it's a program that I'm going to be working on. I'm going to give you guys a sneak peek of that later on in this video chat, and I'm going to show you guys how to be able to capitalize on those breakouts. So that being said, you guys, this is how it happens. So you have to look at it, breakouts from a banking institution, right? Because breakouts happen. This is how breakouts happen, you guys. It's when the banks decide to move in one direction, okay? That's how breakouts happen for all markets. It can be crypto, it can be Forex, it can be futures, derivatives, doesn't matter. When the banks decide to all go in a certain direction, that's when the market goes a very fast, volatile way, okay? So we usually find that the breakouts happen during London session, okay? This is where the most volatility in the market is for the foreign exchange. Is when London session, and that's early in the morning for us people in the US, and obviously in London that's early in the morning for them. But it's it's a session that has a lot of volatility, and I'm going to show you guys the percentages on the ECB market, which is electronic connecting broker, which is where the bankers and institutions place their trades on the connection network to the interbank market. We're going to go into the specifics and show you guys how that works out. So one thing before a breakout, like anything, there's usually consolidation. We talked about this in earlier videos. Consolidation, buildup, and then there's a breakout. Okay, so we'll see right here, as you guys can see, we're going to map out some areas, just give you guys the blueprint before we go into dissecting it from a micro perspective. Okay, so I'm going to be answering questions as well while doing this video chat, so please feel free. Great to see you. Great to see you, Church. Really well. I hope this information does help you. So right now we're going to be talking about these consolidation breakouts. Okay, so this is an area where the market decides to have that consolidation before a breakout happens. Okay, so here is a consolidation area. As you can see, we have that micro stop hunt. So while I'm going to talk about consolidation, I'll also add what a stop hunt is. Okay, so a stop hunt is basically inducing whatever area the market is ranging to or having momentum to. It's inducing those sellers. So in this area, it looks like there's a lot of sellers in this position, right? This is inducing sellers to go short. So the short area is where the market is when the market is basically having this huge stop hunt. So the stop hunt is opening these trades for this short position, right? They say there's a lot of pending orders. So what proprietary traders have over us, retail traders, is that they can see our pending orders, our entries, and our exits. Okay, so that being said, they have areas where they can be able to value the momentum and value the exchange rate and the liquidation, the liquidity, and value where to move it next, due to seeing a bunch of orders being positioned. And we obviously can't see it because we're not a proprietary traders, but what we can do is elaborate and dissect on how the market works, how the proprietaries work. Because if you can get behind the proprietary traders on trades, you will essentially make a lot of profit. Just like how we did on this trade right here. Yesterday we took this trade earlier, and how we took it at that high, at literally the top of this trade, and we are already executing our position and already going to take profit. The reason why is because we're learning how to trade like a proprietary trader. So this is how it works, you guys. So market is obviously having that consolidation. They had a market stop hunt over here to the downside, right? This downside is basically inducing sellers to go long. So at one point, you guys, this was a full bearish candle. And if you guys don't know a bearish candle, it's this candle right here. These red candles are bearish candles. So at one point, you guys, this was a full bearish candle. So people were shorting like crazy, thinking that the market's going to break down and test all new areas, right? But that was just inducing the sellers to go short, trapping their liquidity just to bring back and rise price. So this is a market stop hunt. This happens all the time in the market, and it happens just to trap the sellers, okay? So when we're talking about these, we have to take in consideration that where is price going to the market makers, okay? So as you guys can see, as well, stop hunts usually happen at psychological levels. They happen at break and retest as well. So if you look at previous, right, look at previous structure, look at previous market, structure leaves clues. We look at this area was the last zone before we saw that breakout to the upside, right? So after we saw that breakout to the upside, we saw the market make that huge rain, that market push, where the bankers and institutions really drove price. And this is where we saw that last consolidation area. As you guys can see, that this was basically the beginning of September before they had that high, okay? So this is an area where we're looking for that retest if we're going to go long still, right? We're still in a long position because as you can see, we're looking at it from a macro perspective as of right now, and the market is still making lower lows and lower highs. So we're not essentially going against trend, because trend is our friend at times, and we do not want to try to go with the path. We want to go with the path of least resistance. We don't want to try to go upstream when we're better off going downstream with the flow of the market. So that being said, that's what the traders did. They were going down and they were going with the flow of the market. But at the same time, you got to understand we're still in a we're looking at it from a macro perspective, because as a trader, you have to have a macro and a micro perspective. You have to learn how to be able to dissect the market from two elements and being able to sustain that psychological or that methodology to be able to focus on both terms to be able to stay profitable. Okay. So this was the break of that previous high, okay? Just like we talked about previously, the psychological levels, or excuse me, the consolidation area was as of right here. There's a consolidation area, and right before we saw that consolidation area, we saw an upside momentum, okay? This is where we saw the upside momentum, and then we saw the market obviously test that previous high, that breakout area, inducing these sellers to go short, thinking that it's going to break this trend, which it doesn't. It makes that lower low, and then it shoots price high, right? So this is where a lot of pending orders were being induced into, right? And this is where that psychological level, I'm going to get into it. This is where that psychological level was hit. We saw it hit 500, that area. So I know after we saw that retracement, we're going long. So we would have took that position on a long position to go high. This is where the breakout is, right? This is where the London session is, okay? Right here is early morning. This is where the London session, I'm telling you guys, breakout sessions always happen during the London session. That's why people have this strategy called the London breakout session, right? It's very correlated to how the market works. The market has a lot of proprietary traders, HSBC, UBS, Barclays, and a lot of other institutional banks are trading in these markets at the time. And we're going to be talking about what banks are actually moving the market at that time as well. So it's very important that we're able to establish the trend and being able to establish when these breakouts are happening. So this is very important and crucial knowledge, you guys, for basically being able to leverage your account and make that 10-15% gain on your account and being able to establish those huge maximum profits, okay? So that being said, we saw that was a break and retest. This is a breakout. This is a retest area. We bought here, obviously, and then we saw that liquidity trap. That liquidity trap brought us back to the upside, testing this previous high. So like we talked about earlier, guys, the market loves to test previous highs. And as we see here, the market tests this previous high, and this is where the test was, where the test was formulated, okay? So this is where the market liked to test that high, and this is where we saw the market make that M formation, like we talk about, where the market makes that formation where it looks like kind of like an M, and that's where we considerably know that the market has stopped making highs, and now we're going to look for a reversal. So that being said, I'm going to just draw out one of these sections real fast and show you guys what I'm talking about. See how this is an M formation, the consolidation to the breakout. This is the upside, and then we see that last leg, which is the stop hunt to induce those buyers long once again, and then now stopping them out, going to the downside. So it's just the opposite over and over and over again. So that being said, you guys, very, very crucial knowledge, learning how to find those essential breakout areas like we saw here, and then see that retest, and now we can do the same thing as we did here. We saw the markout make another M formation as of right here. We make that other formation. We can considerably call this the stop hunt area, right, where the market made this stop hunt to the downside, or to the upside, excuse me, right, inducing these buyers to go long, consolidating price for a while to basically get as much liquidity trapped here before they drive price down to the market. So that's why I, as a proprietor, or not a proprietor, excuse me, as a trader that looks for banks and institutions movements, that's how I was able to establish that trend and establish that run for major profits. So being able to sustain this type of strategy is very crucial. So we're going to break it down to the 15-minute chart. So this is where essentially I find these breakout areas, you guys, is that I see how long it takes price to move, because the thing is that banks and institutions do not move slow on the direction they want to go, right? They move slow on the way they want to trap the buyers and sellers, but they do not move slow in the momentum they want to do. So we'll break it down from section to section, and I'll show you guys exactly what I mean, okay? So as of right here, we can see that the market took about a day, right? We took from the 27th all the way up to the 28th, basically took a full day of liquidity, right? And this is right before the end of the month, right? So they built up liquidity for about a day, and then they consolidated price, and then back, and literally in about an hour and a half, they took back all those traders that were still buying in this area. They took all of their profits back, and they closed price just below that previous break, that neckline right here, which is we call the neckline. This area right here where the market had that neckline position. And this is where the market tends to move right? Break and retest, tries to test and break certain areas. So that being said, induce, trap, push the market. Then they tried to make that swing low, and then look at you guys, right here is where price ends at that end of the month, right? Is that they, at the end of the month, they have to make profit because they have also families to feed and they have a book to keep on track for their commissions and their bonuses. So they have to establish these trends. They have to establish the market. They have to make money as well. So, excuse me, guys. So for the market makers, they have to considerably make the profits and make themselves really accountable for their company. So that being said, this is how we look for breakouts. We want to look for consolidation. We want to test. We want to first see areas where it is consolidating for a while, and we want to use that on a range on where it breaks out. So you guys see here how the market broke out at this area. This is also London session. This is where the huge breakout was at, and then it keeps on going back, and literally half the time it breaks back and it takes out all the positions. So that being said, it does it again, you guys, right here. The market consolidates once again. It has this area where it gives you now 1 day, 2 days, 3 days to buy, or to buy, right? Gives you 3 days to buy. It consolidates price, induces you to go long. And then this is where I was able to understand that we're now in a micro trend. I saw this rejection at the psychological level, which is 13,750. This being a huge confirmation that the market is now reversing, because I can see now that price is not wanting to go any higher because I see the psychological levels being a retest. As a trader now, I can use these psychological levels to determine where the trend is resisting and supporting itself now. So I see now that the market is resisting in this area, and the support area, this is a support area. Now seeing this, I know that the market is now going bearish. So this is a consolidation trap, consolidating market, and then as we see here, guys, this is what the trade we took. We took this position low, and then guess what? The market now has made this structure, blowing all of these buyers in this position, hitting all their stops. So this is how you guys find the crucial elements of breakouts. These breakouts are huge on being able to determine the market. So now we can be able to go forth. So I'm going to answer your question, Trish123. That was a dip. The last 3,700 is the latest 4 or 5 minute, and didn't buy because I thought it would go down lower. Shake my head and shoulders here. So I'll go over Bitcoin in a second, Trish, just so you can be able to understand how this works on Bitcoin as well. Right now, we're going to just finish with the USD JPY because all markets are universal. This happens on every single market. It's universal. This is how the proprietary traders make their money, and they've been doing it. This is how a lot of traders lose a lot of money, and they basically get into the smoke and mirrors, and they're not able to execute on their trades because of this. So this is where it's essential. So things to recap is that usually the market has a consolidation area. It tries to break out after a nice area of consolidation. We can see here it took 3 days, and then less than about 4 hours, 5 hours maximum, it took back all the price that it took 3 days to make. In 3 hours, it took back all the price. So that's very, very important for you guys to understand that, and this is really, really crucial information. So now we're going to talk about, I'll answer your question right now. We're going to go to BTC real fast, and we'll be able to break it down on this segment as well, okay? So that being said, we can see that consolidation of price. We're also on the 15-minute chart here. Let's go back to, we got to look at the macro perspective first, and let's see what's going on here. So we can see that there's a lot of consolidation at this area right here. We can see that the market is being now in that short position where there's a lot of shorters in this area, consolidating price, and price is now making this momentum, right? So if we were considerably looking at it from the same area we saw at the USD JPY, we will see that this is consolidation to move to the upside. But as we can see on the macro perspective, we're still in a bearish trend. So we're not essentially going to be looking for higher areas of a bullish breakout. We're not really trying to catch like it's going to 5,500. What we're probably going to be seeing is where this area was before it broke to this consolidation level. We're going to see it test this 4,500 range, which is that psychological area. So that being said, we will see a nice range breakout probably between this area, but I do not recommend, trading really trading higher than this area just because we still are in a drawdown state. So the momentum is still very, very bearish at this time. So we're still letting the liquidity build up, but we will see a market push to the upside before we could possibly see another false breakout, consolidate, and then go lower. Okay, so this is going to be a trap area where a lot of sellers are in the selling position. They're going to get into FOMO, thinking that the price is going back into the direction that they saw previously, and then they're going to see that breakout to the downside, trapping all of these sellers once again. You can see it on a lot of price markets. We can go to previous price and we'll be able to show you guys how this works as well in Bitcoin and crypto as well. So there's consolidation. We can see that the market has been trapping or basically it was trapping this consolidation area, and then once again it breaks this area in less than a couple hours, making that low, making that formation. So we can see that it happens over and over again, maximizing that potential possibilities and so forth. So yes, just like the information does happen exactly. The informations are a very, very key element on when the market makes those breakouts to whatever side. So informations are used for a reversal for the bearish, and a W formation is used for a bullish momentum. So we can see that the market is now making that bearish momentum where it comes down, comes back up, comes back down, test that previous high at 4,500, that psychological level, consolidates price, inducing those buyers again, and then dropping price, shorting the market once again. So this is basically a way that we're going to be able to use these methods to be able to stay profitable and not get caught in the smoke and mirrors of the market and the institutional buyers and the institutional sellers by using market volatility. So as you guys can see here, does the same thing. Market liquidity trap, where the market tries to consolidate price once again, consolidates price for a good amount of time. I'll map this out a little better, you guys, sorry about that. Consolidates price once again, has that range between 6,000 and 7,000, we can say 7,400. Consolidates price once again, induces those buyers again, and then once it has those once it has those positions trapped, you guys, it's super crucial that you understand this, because you see how long it takes price. I mean, they give you 1 day, 2 day, 3 day, 4 day. They give you basically 2 weeks to induce that bullish momentum, that bullish trap, and then back in basically in a full day and a half, they take back price and they blow the stops out of the market. Okay, so it's very, very, very crucial that we understand that how to find these breakouts is super essential. Is when market makes the consolidation area and it ranges in a certain area just to induce those buyers and sellers, and then in a quarter, sometimes less than a quarter of the time, it blows all of these traders out of the market. So as you can see, it does the same thing once again. Consolidates price, then breaks out, consolidates price, then breaks out, and then consolidates price and breaks out once again. So it's very, very, very crucial, and we're going to see the same thing again on crypto as well. We're still in a bearish momentum. We're still using the trend as our friend. The market is still in a bearish momentum at this time. So I hope that answers your question on if the market is going to make that formation. We can see right here the market is making that huge W formation once again, test that previous high, consolidate price, and then now we're going to go long, or go short, breaking that area and going shorter. And we're going to be able to see if the market is going to be sustaining this bearish momentum once we see it test this previous low. If it consolidates in this area for a while, sorry, that looks like a bad drawing. I'll remove that real fast. If the market decides to consolidate in this area for a while, we'll be able to see market momentum push to the upside after it traps enough sellers, making that bearish sell-off. Okay, so this is the consolidation area. We can see this area probably be hit for maybe a while, maybe a little longer than expected, and we can see the market maybe even be consolidating until maybe mid-December, having that bearish consolidation. Maybe test. Finally, we might see a test of the upside after that. After this bearish consolidation has been completed, we might see a breakout to that upside, and we might see the market actually retrace and test these levels of 5,500. But like we said, we got to see sustainability. You got to see the market consolidate price before we move higher. And if we do see it move higher, we have to take into consideration why the bankings and institutions are growing. So right here, we see that W formation, and then we're going to see that M formation, and then we're going to see another breakdown, and we can see that consolidation once again, and then we might see that upside momentum, and then it could come down, or it can break that previous low and go higher. So we're using this a very highly practical trading strategy that's been able to make me a lot of money in the market. It's been able to sustain a lot of profit in the market by using this, and potentially you can use this as well to grow the market. So you're very welcome. Thank you so much for being on this, and it's very crucial that we get this strategies down, because once we apply these strategies over and over again, we'll be able to maximize our liquidity, maximize our profits, and we'll be able to leverage and use more gains so we can have that capital growth, that compound interest to be able to make maximum profits. So we're going to go back into USDJPY and see that the trade that we took earlier yesterday is still being into fruition. We're still waiting until we're seeing it retest the psychological level, which is this area. So I can take my my exit right here. Obviously, I have my trailing stop established, so I don't need to actually do anything right now. I'm gonna move my trailing stop a little lower to the psychological level, and if it breaks this level, then we'll know that the market is tend to break this area, and the market will be done. So we're going to be done fixing this area. We'll be done trading this market, this USDJPY, if the market does hit my trailing stop, and we'll wait for the next position, because right now we can see that there is a market reversal at this time. The market is now sustainably showing that bearish trend. So this is obviously a swing trade, but it's more so of my swing trades are usually only between 1 day to 2 days. They're not going to be, I'm not holding my positions for 5 to 6 to 7 to 10 days to a week. I really just hold my positions for about 1 to 2 days. Like I said, my swing trades are usually only between 100 to 150 pips. And then my intraday trades are usually for 60 to 80 pips, trying to maximize as much profitable as possible over and over again. That will show you a lot of positive growth in your account. If you're just trying to hit these huge home runs, you'll be able to lose a lot of profits and lose a lot of your capital, and then you're going to start revenge trading, over leveraging, and then that's when it becomes a very dangerous type of play to be able to trade in the market. So moving forward, you guys, I want to be able to show you guys a huge essential thing that I've been working on for a while, and I'll show you guys the percentages on the market and how it works. So this is something that I've been working on for a very long time, you guys, and I'm going to be showing you guys this is a quick review on something that we're going to be having in Traders Profit Club in the near future, and I want to show you guys how this is going to be super essential to your trading strategy. So this is how the market works, you guys. The market is moved by bankers, okay? There is actually a scale on how the market works, and this is how we can correlate these trading strategies into amplifying the way that we are taking our positions. So the market is working in 4 or 5 essential ways, right? There's major banks, right? And the major banks have these broker or connection brokers, right? Which makes the interbank market. The interbank market is essentially what all currency exchange rates are being established by. These big institutions, as in Citibank, HSBC, JP Morgan, Bank of America, Deutsche Bank, and XTX markets, and so forth, these guys are the controllers of the market. So they are the ones that control the market. So like we said earlier, these are the super banks. This is how they trade the market, okay? These are the most volatile pairs in the ECB market. Electric connection broker, right? So this is where the big institutional traders, this is the market. These are the currencies that they value the most, okay? So this is where we can be able to establish. So as we can see, one of them is the USDJPY. That's the trade we are in right now. As of this trade, in this position, we're in the market on one of the ECB trades, right? So that's why we saw a maximum profit and a huge volatile range, okay? So that is one of the essential markets that we're able to trade. So We have the Great Britain pound, the USD Swiss franc, the US CAD, the Australian dollar, and the New Zealand dollar. And if you guys see in my tradings, this is where most of my pairs are implemented as. I have one position right here, right? We have this area where I saw the retest on this market low. I saw that there is a possibility that the market is going to make a reversal. Same reason why I've talked about this earlier. You see this huge consolidation area. Where would price like to go? It's obviously going to go into the opposite direction because we're already at the end of the month. We got to look at, for institutional buyers, why would they move price downwards? Where everybody's take profits are down here. They're going to induce a lot of sellers to sell the market just to maximize profit. They're going to take it back and reverse price. So now we're going to be looking to go into this area to take our profits to the upside. So this is where I'm able to maximize my reversal strategies, where I'm able to apply a really firm risk to reward. As you can see that I took this trade a couple minutes earlier before we got into this session, and we're already up in our area, and we're going to see the market possibly, this could be the end of that bearish consolidation. And this is why I put my stop loss right below this area, and we're going to now see this area as a affirmative structure, a support area to now move price higher. So we can also see that I've been in this trade earlier. I obviously took profit, and now I re-entered this trade. Reason being is that I saw the consolidation area, I saw the breakout at this area, and then I can see this as an affirmative structure of support now. And then now I'm looking for a break and retest at this monthly range reset. So this is the monthly range reset. We saw it already go into this area. So now we're going to look for lower lows and lower highs to catch profits and to break into newer high momentums. So this is going to be essentially a good swing trade for the AUD USD and be able to sustain profits. So this is where we're looking to buy as well, buy at that low and then wait for price to retrace and go higher. So we're going to be seeing this AUD USD trade play out in the next couple of days. This is a swing trade. I'm going to be holding it for about another day and a half and see the consistent profit and the portfolio, or have to see the portfolio management that I have with this position and being able to consider to see the bullish momentum and the positive growth with this trade. So this is very important knowledge, you guys, to understand this and being able to amplify that these are the money cash cow trades in the market. They're the highly most volatile pairs. And this is how we trade the markets, by using what the banks and the bankers and the institutions give us to be able to amplify our trading strategies. So this is where we're going to be able to find where to find the most lucrative positions. Okay, so I mapped it out for you guys that this is the daily range per ECB market. Okay, so the euro dollar, we usually have 69 pips on Sunday. Monday we have 109. Tuesday, Wednesday, Thursday are usually the highly most momentum in the market. So that's why we talked about this trade here on the Australian dollar. We're going to see a lot of momentum at this areas coming forward from Tuesday, Wednesday, Thursday. So I might hold this position a little longer until we see a nice take profit area. Okay, so this is where we're able to excel, right? As of right here, same thing with the USD Japanese yen. The market is going to excel, right, in Tuesday, Wednesday, and Thursday. So we're going to see a lot of momentum in the market at this time as well. So this is a huge, like I said, this is a little sneak peek of what we're going to be having in our Traders Profit Club and the program, giving you guys essential percentage gain, percentage loss, and knowing how much the market moves so you can put this in your strategies, use this and amplify your strategies and able to sustain huge amount of profit by knowing the range in the market and knowing where the market is being able to produce. So yeah, so Mary, I'll answer your question. Can I check out the stock market's essentially interest in buying Apple, BlackRock, and JD looking for? We usually talk about foreign exchange and cryptos in this. In our Discord group, we have some great things as well. The link is in the bio. We'll be able to answer all of your questions for stocks and all your analysts as well. And Michael Jones, so daily chart is for trend, 60 minutes for entry, correct? Not essentially. I look for the daily chart. So I'll go back to the price and I'll show you guys what I mean by that. I look for the daily chart for basically seeing where the momentum is. So I look at the daily chart, say we have we're in the AUD USD trade. I see that this is the range of market price, okay? So this is where I'm able to consider where price is moving as of right now. I use the daily chart as showing where the momentum of the market is, right? As we can see that there's a peak formation low showing that the market is now reversing into a bullish trend. So then I want to see this area being a consolidation area before a breakout. So now I use the daily chart to be able to amplify my strategy to implement what is the best way to get into the market. So I use this as the momentum indicator. Basically, I use the daily chart as to show momentum. For my entries, I look for the 15-minute chart because I want to see the break and retest of those previous weeks. So I look for consolidation areas. I look where areas have been already showing the consolidation before the breakout, because once I see those areas as that consolidation, I know where the market won't go anymore. I know that the market is going to use that area as a support, right? Old resistance becomes new support. So now I can amplify my trading strategy by implementing the ways that I can use by using this 15-minute chart to see where the range is. So I can see that this is one breakout area, this is two breakout area, and then I can see that it's already consolidating. So I know this is a perfect area to buy to test these previous levels at the daily chart. I can look at the market still has a lot of momentum to go to newer highs. So I hope that answers your question why I use the daily chart. Is basically I use it to show the momentum, to show and amplify how the trades can be able to show that the range and the momentum is used to be able to enhance our portfolio and our trading strategy. So that being said, you guys, I'm going to go back to the 15-minute chart, and we're going to see that we're going to probably see a huge breakout coming this Tuesday through Thursday. We're going to see a breakout to the upside. We can see that market liquidity has been trapped once again. The market has made this area a M formation, right? Previous high. We use the informations to use that reversal. We're going to see consolidation, and then we're going to see it rise past this area because we're now in a bullish trend. By using that daily chart, we can see that the market is using that bullish momentum. So I hope that answers your question, Michael, on where I use my entries and exits and being able to establish trend and why I use that trend to be able to maximize my portfolio. Great. So Renose, you change the charts according to how you want to trade. If you want to use a 60-minute, you're trading every hour, etc. Exactly. You understand it perfectly. You can use whatever chart whatever chart you decide to that you want. Like I said, you guys, this is all universal. You can use this same strategy. All we're trying to find is that where the liquidity is being pushed to, where market price is showing that consolidation before a breakout, and seeing where that retest is before another breakout. And we have to use a macro perspective to show where price is deciding to go. Because if we use a 15-minute chart just to trade everything, I mean, we won't see the bigger picture, right? We have to look at the bigger picture to see where price is going to go, because we won't have really good exits. We won't have really good positions on entries by not knowing the bigger picture as well. So I hope that answers a lot of you guys' questions, how to find that breakout. You want to look for that liquidity trap. You want to look for that previous lows where the market is consolidating, and then you'll see these huge market upside range. We see one level, we see this consolidation, we see two levels, and we're going to look for that third level coming up here, because the market works in levels, you guys. The market works on 3 levels, and we're going to show you guys how that works in the sneak peek on where our trading program that we're going to have on Traders Profit Club on how the market works, okay? So going back into the zones in the market, okay? So find the most volatile time zones in the market. Very essential. Tokyo is a consolidation areas. Tokyo session is when the market consolidates a lot, right? Because you guys can see that Tokyo session is the least amount of volatility for most pairs. You can see that 76 pips are only managed, but then if you look at London and New York, London is the most volatile session. Like I said, volatile and breakout sessions are always in London session because it usually has the most volatility. But we use this as a firm decision maker on when to see where our price and when to enter our trades. So right here, we see London session, a huge volatile breakout. We see New York session, a huge range as well. Great Britain pound, we see that the market, a London session is going to be a huge breakout as well. And then we can also see in New York session, is where you're going to see a huge breakout. To buy as well in Traders Profit Club, this is just a little sneak peek. I want to show you guys how I use this strategy, how I find my key exits, how I find my entries by using the institutional banks, by finding the best volatility in the market, by knowing the range, by knowing the percentages in the market. Over and over again, I'm able to amplify and trade by maximizing my liquidity by using these essential percentage gains and percentage of whatever session I'm using as well, and also the days on when the market breaks out the most to amplify and use as my strategic plan. This is also something I want to guys show you. This is a trading strategy that we're going to be able to amplify what markets used to use. We learn these are crucial things. Midweek reversals, when the market tends to reverse in the market reverses usually on Thursdays, Wednesday nights as well. Zone hopping, M&W formations, as we talked about in the pricing, how we find those consolidation areas, how the market works. We can be able to use these strategies, right? These are just strategies to be able to have that confirmation on to be able to buy and sell in the market. So I hope that answers your question on being able to use the market strategies and being able to flow as well. So Michael Jones, I want to master trend entry, exit, consolidation, breakout, and risk management. Great, because you're in the best place to do that. We're talking about all those essential things here in the market and being able to amplify how to use these strategies by having the program that will be available to you guys very soon, and using these to use these simple strategies. So it's really simple and really easy to understand. You're very right, Jose. It's really easy to understand after you really practice and practice and practice. And since I'm going to be live every single day, giving you guys this amazing knowledge, you'll be able to use this to make thousands of dollars in the market, right? So right now, we did the same thing on this trade as of right here, and we bought at this consolidation level. We saw that this is the weekly high where the market decided to make, and then look how much profit we made, you guys, on this one trade. You see how easy it is after you sustain this knowledge and being able to execute the knowledge that I'm teaching you guys. You'll be able to make these huge profit gains and be able to have low risk. I mean, if you guys look at just the risk management, my risk to reward was 5 to 1 on just one trade. So even if you were to lose, right, 5 trades, right, and then you just have one good trade with the right risk management through our strategies and through what I'm teaching you, you'll be able to gain back all that profit you lost just in one trade after you lost 5 trades. So that's how you stay profitable, because it doesn't matter how much trade you lose, and it matters your risk management. It matters how much you're able to risk to how much you're able to get your reward, because at the end of the day, if you're only taking 5 to 1 trades, 6 to 1 trades, 10 to 1 trades, you can lose a lot of trades and be able to gain it back in super amount, and vice versa. If you're winning so much trades on such a low risk reward, you're just going to see, excuse me guys, a sustainability on that trade and on your account. So this is really crucial knowledge, and I'm so excited that you guys are here today and showing this. So as you guys can see, market likes to repeat itself. It had 1 level, 2 levels, 3 levels of range, made that stop hunt to the downside, made this consolidation, and then again, we're going to see 1 level here, and then we're going to see it go down and test these previous lows on the lower charts. We're going to see it test these levels as well. This is where we're going to see the market tend to repeat itself, because the market loves to repeat previous market structures, previous market momentums. It's just finding those key entries, those key exits, those elements to be able to make maximum profit in the market. So Michael Jones, the JPB, Great Britain pound, or JPB yen moves like 500 to 1,000 pips a day. Yes, it's a highly volatile pair. It's a part of the Redderers market. So the Redderers 3000 desk is also a part of the interbank market, a highly volatile trade. The market does work in that well. I try to specifically focus only on a couple pairs, because because it doesn't matter how much pairs you have on your market, right? If you have 20 pairs in your market but you're not making any money, what's the point of having 20 pairs, right? If you have 4 pairs that you master, the structures, the percentages, the gains, the entries, the losses, you'll be able to maximize your portfolio by just focusing only on a couple of pairs. And that's why I was able to succeed in the markets, because I only focus on 4 to 5 currency pairs. I don't focus on 10. Like as you guys can see in my watch list, I only have around 5 different pairs that I focus on, because most good traders only have a certain amount of trades, is that they only need a certain amount of tools, which is these currencies, to make a lot of profit. Because what happens is when you have a bunch of trades running all around the market and you're not really using a strategy that focuses on a certain amount, you become really just overwhelmed. And this overwhelming structuring in psychological, you'll start to be able to lose trades, make poor judgments, and not being able to execute on the trading strategy. So that is a really big one. Michael Jones, thank you for bringing that up. I really appreciate that. So I'm going to go back to the trading strategy, you guys, and I'm going to be talking about this in tomorrow's video, and we're going to be going over all of these setups. We're going to be talking about midweek reversals, zone hopping, M&W formations, 3 levels of rise, just like how the market in the AUD is making right now. So if we go down to section 4 on the level of rise, we'll see how the market is exactly doing what we're talking about, okay? This is 1 level of rise, 2 levels of rise, 3 levels of rise, okay? So if we go back to this market, we can see that it's the same thing. We'll go back and see, right? The market is broke out of this area, right? Consolidation breakout. And then we can look at the 15-minute chart and see that the same thing is being implemented. 1 level of rise, 2 levels of rise. So I now know that there's going to be a 3rd level of rise. That's why I went long on the AUD USD. And this is what you guys are going to be able to use in your trading strategy. And you guys will be able to buy this program and make maximum profit. It's going to be super essential that you guys use this to be able to excel on your trading programs, on your trading strategies, and be able to make maximum profit in the market. So honestly, just go into crypto like you lost the money already. Point is, you need to learn and expand your knowledge. You need to get your feet wet. I've learned my losses exactly. This is super important and super essential. Brendan, can you teach from your losing trades also? Yes, of course. I mean, I'm not always a profitable trader. I mean, in our Discord group, you know, I've had signals like the Great Brendan Pound. I lost, you know, already last week. I already knew that the market was going to make this bullish momentum, but I was getting stopped out because it made these huge whipsaw, which I call whipsaw, on the price formation, where price kept going lower and lower and lower. But knowing my trading strategy, and I always execute on what I know, I still didn't give up. I still kept on going in my position. I was just a little too early, right? So the thing about my trading now is that I'm usually always correct on the way I'm going, just because I've been studying the markets for such a long time, you guys. But sometimes I'm a little too early to the market, right? I earlier last week, I bought at this previous high, and then obviously I got stopped out, right? I didn't catch that low, right? So it's all about finding those lows in the market, finding those stop hunts, which we go over in this key formation in this program that you guys are going to be able to have in the next couple of weeks, where you'll be able to find the market liquidity, market structures, and being able to use these strategies that I teach you guys, right? All of this knowledge is going to be available to you guys. You're going to be able to learn how to maximize your profits by finding these are all the things you need to be able to be profitable. I'm telling you guys, this is all the things I use to stay profitable in the market, and how I'm going to be able to give this to you guys as a blueprint to be able to have days where you're making money hand over fist, and essentially the market will then become like an ATM to you over time, where you can be able to make those structures in previous highs and previous lows. Okay, so one more thing before I get off this live stream, you guys, is that I want to talk more so about the mindset. Okay, so mindset is everything, right? So even though I lost a lot of trades in the market previously, and I was losing thousands of dollars, and you know, I've had those nights where I couldn't sleep, or I would just, you know, be over leveraging, and I had those FOMO trades. I would just basically be over trading the market, and I would be just using this trading strategies to try to, you know, get rich, but I wasn't using it to sustain profit. So that's the difference between profitable traders and traders that just make a bunch of money and then they lose it all in a couple months, is that you're not trying to hit home runs. You're trying to just maximize as much profit as possible and use these percentage gains. That's the only reason why I only do 60 pips intraday trades. That's the only reason why I do 120 pips. I mean, yeah, I could make a lot more money, but you get to take that money to the bank. You get to take that money home, and you get to use that money to help your family or help support your financial freedom. It's about using these faculties, using this blueprint that I'm teaching you guys over and over again to be able to maximize profits and get those 60 pip percentage gain, 120% percentage gains. Because if you guys think about it, if you have a $30,000 account or a $60,000 account, you're able to make $4,000 a day, $5,000 a day. And if you do that over and over again, by the end of the year, you could have $700,000, $800,000, you guys. That's the thing. You don't have to hold your positions and go from, all from the lowest low to the highest high and hold it for about 10 months. You can literally take these strategies that I'm teaching you using this key element, this blueprint that's going to be available for you guys, and everything's already mapped out. I've already done all the due diligence for you. I've already done the pictures. I've already done all the stuff you need. I already give you to be able to the notes, the strategies, the take percentages, right? I give you guys everything you need in this program to be able to give you guys consistent profit and to be able to know how the market works and be able to apply this to be able to make days where you're making $3,000 or you're making $5,000. So I hope that answers your question on how to be able to amplify and use your market strategies and use the market consolidation for your embetterment, right? To use it to be able to focus on consistently making profits and consistently making returns in the Forex market. So I'm going to end this, you guys, on a good note. Just make sure, excuse me, make sure you guys use these strategies, use what I'm teaching you, apply this, maybe go in an emulated market, and once the program is ready, it will be available for purchase. Go into the Discord group, you guys. I'll be answering any questions there. I'll be answering all comments, anything you guys have on the market, as well as giving you guys key knowledge on using to stay profitable. And I hope you guys learned today how to be able to use the consolidation as to maximize for breakouts, because consolidation always on the other side of that is a breakout, just like life, right? When you're going through a hard time, when things are rough, when things are going against you, you're right next to the upside. You're right next to the breakout in your life, right? Things are only temporary, right? Strong people are always, if you're strong, you're going to see that other side. You're going to see the other side of the mountain. You just got to keep on grinding. You got to keep on pushing forward, and you will manifest your desires. You will manifest everything that you've always wanted. I'm telling you guys, I didn't start out with a bunch of money. I didn't, have all this knowledge. At first, it just took a lot of time and due diligence and practicing over and over and over again, thousands and thousands of trades to be able to give you guys this defined knowledge to be able to maximize profit. So that being said, you guys, I really appreciate you guys being on this live stream today, and I really am excited for tomorrow's live stream. We're going to be talking about all of this information on the blueprint. We're going to be talking about information on how to find these breakouts, how to look at these ranges, how to use these strategies to amplify the trading markets and to stay profitable, you guys. So I'm really excited for this. I'm so excited for you guys to be a part of Traders Profit Club. And this is going to be the end of this live stream, but I will be in the Discord group answering any questions after this. And I hope you guys have a blessed day. If you guys have any questions at this time, feel free to put in the comments before I leave, and I will see you guys in the Discord. All right, you guys, have a great day. Stay profitable. Use these strategies. I'll be in the Discord at this time, and I hope you have an essential trading profitable day, and I'll talk to you soon. All right, guys, have a good one. Bye.